you know, as productive as we normally see, the Santa rally, I didn't feel like December really happened. I thought there was a lot of chop. Certainly, uncertainty in the world has made an impact, I think.
Yeah.
Um, when you're looking at politics and, confidence of the market, has been fluctuating.
It's
So,
absolutely true. And what one thing I've learned is I can listen to the news, I can listen to analysis, uh,
mhm.
and it doesn't matter. It's like what is really happening at this moment in time. In other words, what's the chart actually saying?
Yeah.
Um, I like the fact you brought up December because that was kind of fun for me. I didn't do too bad, and I was expecting a lot less volatility, the last couple months, and then I heard about the Santa rally, and so I did a little research on that, and I looked at exactly last year, and there was no rally last year. In fact, it was very bearish that last week, and so
Yeah.
I looked at that. I'm like, we got a repeat of exactly what happened during the last few days before Christmas last year, coming off an all-time high. So that actually
Mhm.
protected me. So I just threw that out the window. I'm like,
Yeah.
we'll probably come back down and test these lows here. And we had about 3 or 4 days bears, identical to last year.
Mhm. Mhm.
So I guess it's a rally for the bears, but it wasn't a rally for the
Yeah.
bulls.
No, not at all. Not at all. Well, it's hard when you're hitting some all-time highs because the question is, does it continue? And we're getting some movements that 100 points in 15 seconds. Sometimes these candles pop up. So it's really you have to protect yourself. Take the gains when they're there.
Yeah.
And sometimes you're just going to have to take 10 points at a time, you know?
Yeah. And so you're probably talking NQ, aren't you? Because
Yeah.
I've been trading
Uh-huh.
the ES.
Yeah.
So much because I don't deal with those wicks near as much as I did in the NQs. It's just been a lot. I've been doing that probably for about 6 months now. I mean, exclusively ES and MES for that reason because 100 points. I mean, again, ES is going to pop, every bit of 10, 15 points.
Yeah.
When the Nasdaq is popping 100, that's for sure.
Hmm.
Uh, but
Hmm.
it seems to be a lot more controlled moves for me, and I've kind of enjoyed it a lot more.
How's your indicator working that you built
Um,
the bot?
I built that, actually a few months ago, and I kind of keep forgetting to turn it on. But I do turn it on to kind of overlook, and I really do need to use it more because it's
Mm.
freaking pretty awesome. I'll be honest with you. The only caveat is, I've got it written to where it must um, follow like if it's going to be a long and close over the 21, it's got to follow a red candle. And so a lot of times I look at some of these good moves and it doesn't show a buy signal. Well, it's because it's a following a preceding green candle. But we can look at some of those because um, what I like about it is it just validates really the only trading that I do anymore, and that's up and away or down and away from the 15-minute opening range. And then
Mm.
once we get a double bottom, then I'll look at a double bottom and a reverse again only because matter of fact, let me bring up a chart because I think this is probably elementary, but I think it's real important to kind of see. But when we look at any any reversals, like down here on the bottom, you guys aren't seeing my screen. It'd help if I kind of share my screen, I imagine, right?
Yeah.
Just a little.
Yeah.
It's more like imagine if you will.
Yeah.
Okay, let's try that. And Kevin, how are you while this is bringing up? We just
Oh, doing
got
good. I
right into,
had a good holiday season. Hope you guys did as well.
oh, absolutely. Absolutely. Yeah, my daughter was here. Picked her up around 18 December and just took her back this past Saturday. So it was really nice having her here for a few weeks.
Mm.
Here and gone, here and gone. So it's been a busy couple months, but it's been I had a good holidays, one of the better ones I've had in a while. Are you guys seeing TradingView?
Yep, we're
Okay,
seeing it.
fantastic. Um, yeah, because even today just makes it really clear. But and again, here's ES. Let me look at the NQ and kind of see if we can't just see the same thing here. So there's kind of the 15-minute range. So and again, I haven't been studying the NQ that much, but a lot of it should apply. But this 15 minutes, here's first 5 minute candle, the second and the third. So that's our 15-minute range. And you kind of see how it hits that pre-market news catalyst. So that's a really clean retest right there. And then things kind of roll back. And this 5 minute candle here was real wicky, so it's still kind of tough to get in. But you notice by the time we come down and we actually get a 5 minute candle closing outside or below this 15-minute range, well, that's number one criteria. So now we're looking at down and away. Okay, and how long do you stay down and away? Well, you just stay down and away. You get in as close as you can to this 15-minute range. And you're again below your fast moving EMAs, but let's just say from the 15 until your first opposite colored candle gets trapped. And that's just the opening range. And again, it's that opposite color candle getting trapped that just things go sideways there for a while. Okay, and then you get buyers proven to come in. But what I was really wanting to get at is you just stay down until you get this opposite colored candle, and you really I don't look at getting back in until I've got follow through and close of candles above both my fast moving EMA, the white one, has got to
Mm.
be up above the green. Okay. And so it kind of protects this kind of stuff here, because that's kind of what Anthony was talking about too, is just this was so fast. I mean, that's 61 points,
Mm.
really in just seconds. And so if you're moving up your stops, with each of these candles, there's nothing wrong with getting stopped out, because this would have been, if I was in down here, this would have been my exit candle anyway.
All right.
And it's a clear trap. There probably would have been a lot of slippage there, but it's a clear trap. So even looking at it that way there, if I get in above these bear candles and come up and I get stopped out right there, that was 48 points. It's not bad. Um, but how far is this going to go? Okay, we didn't quite make pre-market highs or the opening session high, but look at this. This is beautiful reversal criteria. You lost all your bearish momentum, but again, if you kind of wait until your white or your fast-moving EMA is below slower, then also below VWAP. So when we get below VWAP is probably the most important area on a chart, in my opinion. Because how many times are we just going to stay up above VWAP, keep bouncing off, going up? So here this candle coming in here is really strong. And if we get in right here like a VWAP, we clear this candle here and our fast moving EMAs are pointing up. Anywhere getting in here is good. Again, above VWAP, above both fast moving EMAs, and I don't have to worry about exiting for 84 points. Okay, missed a lot here. But again, with this sideways here, I'm jumping through a lot of stuff. But you know, you look at a Fibonacci, you know, coming all the way down. Well, let me look at it the other way, actually. No, I was looking at it right. I use the Fibonacci on Trade-Evate because it's so clean. But really what we're looking at here is, you know, from this move down, you know, once you get up around this 50, 60%, how many times do we expect to roll back over? You know, so that's again another defense mechanism. And over, how many times if I will only trade in the direction that a 5 EMA is above a 20, the two fast moving EMAs are crossed over in the right direction, and I long and only long, okay, I don't lose near as much. You can scalp when you cross back over this 5. You can definitely scalp. A lot of success. I won't say that it's not successful. You know, you just got to manage your stop losses here, or be ready to absorb something like that. You know, because in theory, your stop should be clear down here anyway.
Right.
You know, beautiful exit criteria here, lower highs, lower highs. You know, so if I was getting in here, you know, here's where I got here's my first trap of a bear candle. So then we're kind of going sideways there a little bit. But what we got to really look at is like, hey, VWAP's up here. Here's my fast moving EMA. But again, it's all when the white is below the green, and plus I'm below VWAP, it's safe to short all day long. You know, you come up here, don't really have any, you know, is this exit criteria in here when this bear candle? Yeah, definitely is. I mean, by definition. Well, here's where you're getting out here. And really there is no entry criteria because the white to go long, because the white is not above the green. And that has protected me from, you know, because I'm such a bullish trader by nature. You know, so a lot of times, you know, you can scalp getting in to follow through of these green candles, coming back up on the 5 EMA or the real fast moving EMA. But we don't get that clean follow through when the white never comes back above the green until we get over here. So here's where we start looking at getting in here. And then again, that would be just a scalp because you could get anywhere in here. And your exit criteria is this red candle right there. That, in a nutshell, is all I do. You know, Fibonacci, I'm using that a lot more, but that goes more into the maybe a Globex perspective. And when we kind of a Globex slash, if it's bearish, I'm really looking at that 50 to 60% area, because if we continue up through that, a lot of times we are going to come back up, and a lot of times either retest these session highs or continue on up making higher highs. But if we only hit that 50 to 60%, so I'm not really seeing it here, the NASDAQ definitely went up well through that, but it come all the way back up to this upper range right there. So once you clear this right here, so if you did get in right here, once you kind of comes above this candle here, man, pretty comfortable there for a while. You don't really have any reason to think about getting out until inverted hammer right here, or shooting star right there. And then you can look at it. like from this one here, again, hitting that 50-60% range is kind of like, if there's not clear bullish momentum, I'm just getting out. Of course, this is time market's getting ready to close right there also. So that's kind of where Fibonacci kind of extremely valuable. It allows you to kind of stay in a little bit longer. But on the other hand, hi Svetlana. However, what is the chart telling us at this time? What criteria are we using to enter? Are we overall bullish or bearish? We know by the fact, are we continuing? If fastest moving EMA is above my medium EMA and I'm above VWAP, I'm going to go long. And I'm never going to hope that it reverses when it comes below that, especially when we break below VWAP right here. If I was long here, game over here. So if I got in here, didn't get out there, definitely out here. And on an end of day trailing, that's not a big deal. But on an intraday trailing, that can kind of mess you up. However, that's has to be so ingrained in our thinking. It's like, hey, where am I violating rules if I stay in beyond here? Period. And that's that to me has been my biggest struggle. Really is I do not exit early enough. And my best days are when I do get out and I'm actually not in a trade near as much, and I just wait for the official conditions. Like here, no conditions met to go long, but conditions met to go long here for one final scalp. In that last hour, if you're still trading, really clear conditions to get in and go short here. This indecision right here, well, it didn't even make it back up to our 15-minute opening range, and then we just had a nice little flush, and then it continued down. There's just done at this point, above that hammer. Shoots back up, comes back down, just makes a slightly lower low. This candle right here is very indicative that the buyers did show up. Okay, and then again, waiting. It's like, hey, I want to wait. I want to be above VWAP. If I'm above VWAP, that's the only way I know I'm going to make it up to here, for one. So anywhere above VWAP up into this area is going to be a very good trade. So why it's trying to decide what it's going to do here, rejection from VWAP again, there's no FOMO. Those are real important. If you're long here, if you got in down here, you're scalping, those should be great reasons to take some profits off the table. Excellent reasons to take some profits off the table. A little short of VWAP. Hey, we finally got it. The second attempt rejected. If you're long here, take some profits off the table. But if you're very bullish overall and you want to retest this area here, well, what's it going to do above VWAP? Rejection. Well, you see the 1 hour 50 EMA bouncing off of that, a high or low. Hey, anything above this candle here, specifically trapping these bears here, and I've got my VWAP, all conditions met, boom, to get in. Okay, so that's the NASDAQ, and you can kind of see basically exact same thing on the ES. Okay, so with copy trading, I'll trade small accounts. I'll use 5 micros, and then I'll usually either, depending on the other accounts, it's a ×2 or ×4. 150K account, then I've actually got 2 minis. With 50K accounts, I'll have 1 mini. With 5 micros on 25K accounts. But again, you can kind of see we already talked that through. As soon as this wick comes in here, we're below 15-minute opening range, all the way down to that candle right there. And it's real clean. And this trailing drawdown is not near as bad in the ES. That's another reason I kind of like it is, that's 6 points, a drawdown, which, that's $150, but we made 20 points coming down. And a lot of times, once I hit 20 points, I'm actually got a clean break anyway following there. It's just there's no candles coming close to getting taken out until you get to this. As soon as you get that, it's just a real clear, it's like, hey, this big bearish move is going to pause. Even if it does come back up and roll over, there's more times than not, you just got a lot of noise for about another 30 minutes to an hour before you can figure out what it's going to do. Okay, once we could not make a higher high here today, we're breaking below this VWAP again. And then once this white is pointing down below the green, fast moving EMA 5 is below my 20. I think that's what they are right now. I've got a 21 EMA and a 5 EMA. Those are my two fast moving ones. I mean, again, I'm not locked in on, well, it's consistent on all my charts, but I mean, a 9 and a 20 is beautiful. The 50 EMA on the 1 hour is beautiful, or it could be just a 200 simple moving. So many of them give us the same type of framework. So there is no one set of moving averages that I believe are superior to the others. But I want two fast moving EMAs to be in agreement. And then what's my relationship? And really, like this 100 EMA, the red, kind of treat that like.
This is in the red and this is in the black.
Yeah. Hey, Michelle. Good to hear you. I don't see you. Good to hear you. Yeah, it's because it gets, again, the VWAP is, I think, one of the most important areas of the screen. I kind of stated earlier, because you're either going to come down and VWAP is going to work as support most of the session, or it's going to work as resistant, depending if you're bearish or not. But what I like about kind of bouncing around some other platforms from time to time is like this 100 EMA is extremely valuable, and it really works as a VWAP. On intraday trading, it really works. If you're consistently below your 100 EMA, well, you should only be shorted. When you get a long ways away from it, you can look at get long back into it. But again, what are the conditions that are required? Well, it's not really all that clean here. Again, we also know that we've got a very bearish sentiment, throughout the whole session. So this right here is also should set the tone for the day. We've got to watch out for this, but the bears come in. We're coming off of all-time highs during pre-market. Opening session could not get back there. We've got really, if you look at yesterday's, all the way down into this area is what I was expecting today, potentially. All this volume down in here. We didn't quite make it down there, but pretty darn close, because there's just a lot of imbalance right through here. So again, that goes back to that larger time frame analysis, and how many times do we have this down here? But price could have come easily right back down to where it opened up and then went up and made an all-time new high. That does happen from time to time. And we got to learn, how can we recognize that below our 15 minutes when that's the case? And there actually is a couple good examples for that. But this right here says, okay, I'm going to be more patient when I'm short, and I'm going to probably scalp a little bit more, take profits off the table a little quicker going long. That's what this tells me. Same thing over here. Here's 15 minutes. Okay, a lot of the move is over here, but when we're fast moving EMA, staying above the green, and again, up and away from our 15-minute opening range. And as long as this white stays above this green and pointing away, I can't short. You know, we can expect it to roll over, come back down and retest VWAP all we want, but it's going to, as long as your fastest moving EMA is staying, in other words, you're making higher lows and higher highs, you don't have that clear double top. You don't ever have your fast moving EMA staying below the green. So not one time is there a reason to go short all day yesterday. And there was a time where that's all I would do is sit there. I'm so extended from my 100. I'm extended from the VWAP. I know it's going to come back in. And so sit there and wait, and it just continues to go up all day long. Okay, so as long as this white is staying above, you know, the 5 EMAs above the 20, what conditions were met to consider that a reversal could be at hand? And it just never did present. Never did present. The only time you get it here is a lower high here. Now our white's below. Of course, this is that last hour. And the market wants to try to find a little balance. It comes back to the 100. But again, this is really non-tradable. Okay, here's what I was talking about real quick. Coming down to this Globex low, the moment this candle starts getting taken out, so if we got in anywhere here, it comes back down, this green candle's coming in, that's when you got to recognize, hey, I don't want to get out up here, but that's that liquidation. On an overall very bullish market, sweep down, and then it's such an immediate reversal. The majority of the time, you're going to make a higher high off of this type of liquidation in that opening session. These can bite you fast, but if you recognize it quick enough, because if you're long by bouncing off this VWAP, it's pretty easy, but once it breaks down through here, you could be getting liquidated. So you've got to cut your losses here. Then it comes right back through, and then right away recognize, hey, my original game plan is solid. And that's exactly what happened to me on that one there. But I recognize this as very bullish liquidation. And so here's an exception where, hey, we're down. Again, if you look at the rules are 5-minute candle, you're looking for that close of a 5-minute candle below this 15-minute range with the follow through. So in that 5-minute candle just becomes one huge candle, and then immediately you cannot even get a lower low here, and it traps it. That's textbook liquidation. Any questions on that? Because that is extremely valuable to recognize. And more times than not, that is very indicative of a very, very bullish day. Let's review a couple things. 5-minute candle finally closes above here. Things kind of go sideways. So you're really not looking in. But if we can get in, and here's some reasons to get in these wicks right here. So if you are going to go in, hey, your only risk is 6.25 points, you know, on the ES. That's probably about 50 points on NASDAQ. That's your only risk. And then it's just a matter of, hey, as long as my white keeps staying in, you know, I've got opportunities to get back in here. A nice little bounce off of here. You know, I mean, that's from a scalping perspective, that's my exit criteria there because of that tweezer tops and bullish momentum's kind of dying. But it's like, okay, another bounce off the 21, get in back up in here. You know, again, getting out below that candle. That's all I do. And larger time frame analysis is extremely important because we want to know, hey, when the daily chart is showing us bearish candles in a row, then we can recognize the bearish trend a lot easier. For me, that's real important because I'm such a bullish trader by nature. But what is happening outside that first 15 minutes? That's, to me, the number one rule. And a lot of times it's going to go on the rest of the session. Because now this line through here really becomes important. You know, a lot of times, how many times are we going to retest this 15-minute high? Once it starts getting down below that, well, it's also where your VWAP's kind of migrated to. That's not real key here, because there's one other topic I wanted to kind of introduce also, that, and again, it works really good on the ES, and I'd have to see what that looks like on the NASDAQ. But I'm finding from an intraday trailing drawdown, just the looking for 4 5-point trades per day. And when I hit those, as I go from one account to another, as I'm finding out that right there is the most probably one of the more profitable with the least amount of risk involved, because then again, you're still looking at that same stop of being around 5. And what does that look like? And again, it's from the ES, but if we look at 15-minute opening range, I want to see follow through from this first candle that closes up above that. And I'm just getting all these wicks right here. But when I see this support down in here, I'm looking at getting in right here. And it's like, hey, I'm just looking at, can I get 5 points out of that? Okay, so I'm a quarter of the way done for the day. Okay, the nice thing about that is that we happen to catch it on this wick right here, which is kind of cool, because the next setup is I get a nice little hammer bouncing off right here. And again, my risk, I'm getting back in here, is again just going to be 5 points, and I wouldn't even need it to be 5 points, as small as that candle is. But what's the probability of getting another 5 points above this candle up to here? Well, there's 10 points. Okay, and now it's like, oh, I could have got another 5, I could have got another 10. You know, if I was to stay in there the whole time, you know, I could have went all the way up into here. But the magic of what I want to kind of articulate is NASDAQ, you need to find out, hey, is that 20 points? Is it just 10? Depending on your size. But don't get back in ever until you get a higher, you know, a pullback with a higher low. So you got 5 here. Well, then I've got, this is the bullish trap candle that I'm looking at right there for another 5 points. And plus my fast EMA is still above this one here. Once I get out of here, I got 5. Well, I really don't, I mean, there is entry criteria here again. And if you get in above that one there, you know, then you're a little bit shy of that. You might not get 5. And it only, you know, 5 is clear down here. So even if you got in over this candle here, you're just a little bit shy there. That's where most likely you get these tweezer tops here. It'll take 2 to 3 points. And then cut it, and then wait for official entry criteria again. And I'll show you. Here's that indicator that I kind of showed you a little bit. See how green candle following the red candle, closing above? Well, here's that entry criteria. You know, the script or the indicator is basically opposite colored candle if you're long, it's going to tell you to buy when it closes above the 21 following a red candle, essentially. So
Jake, what's this indicator's name?
you can call it Jerry. I made it. It's actually, I wrote it. Yeah, it's but I call it Grok because I use Grok AI. So I do call it Grok actually.
That's a cool indicator.
Yeah,
Are you able to share it?
I can basically just copy the code, and then you could kind of tweak it because I'm thinking of changing, going in and kind of manipulating it. See, like right here, buy signal. Okay, so you must have a green candle and the opening must be less than the fast moving 5 EMA and close greater than. So so a green candle that opens below the fast moving 5 EMA and closes greater than the 5 EMA and is greater than the 21. And previous candle is actually red. So that's why you don't get buy signals. Let's see here. See, this open and closed above, this open below, closed above, and the previous candle was red. So I'm looking for those traps. But I don't know how to share the indicator itself. I've never really published anything on trading.
It says publish script, maybe that one. I don't know.
Yeah. I could mess with that and see what we got. Or I could just copy and paste. I use Grok to kind of help me work through it a little bit. I mean, you can use ChatGPT and probably get the same results, but I'll definitely just copy the whole script in there, and you can paste it in a homemade script and mess around with it that way if you want, and then give it whatever name you want. But it's kind of fun. And I found myself not turning it on a lot because I know exactly what I'm looking for already. But it was very nice initially because I wanted to kind of validate, because I think these are 9-point targets on the ES, which is actually pretty big. That's pretty big if you put that in the NQ. But it's like buy signal down here, like when the market opens, you take profit. You get a buy here, it's taking a profit. And then really you're buying all through here to include here, and then this take profit starts here. So, I mean, really, this is where you would add to your position when you get additional buy signals. And then you get your take profits up in here. Here's another buy, here's another buy. Well, this stop here is most likely from this buy right here. It triggered to fill clear up in here, and then we rolled back down here and got stopped out. So this is a stop loss, but this is the only stop that we've got for the day. And so when it's going sideways like Globex, to me it doesn't work. You know, again, you're not in a trend. Here's a buy here that like this morning, it actually was bullish. So I did buy early. Then of course, if he was in during the news, we would have got to take profit there. Here we got a buy. Did not make a newer high here, so he got stopped out there. But again, that's within the 15 minutes, so never trading. And it kind of goes back to what we were talking about earlier. So we're short here based on our other criteria. So if I put on my short sell one here, I got to go in and tweak that, but there should be a sell in here somewhere. But from a bullish perspective, oh, now I've got me there we go. And we were kind of talking about it when the session started, but because of our opening range, we know we're going to trade down and away until we get a trap on an opposite color candle. That's just 101. Okay, to get back in, this is where that indicator does kind of help, because it kind of helps you be patient. No, again, no candles closing or opening below the fast moving EMA until we get here. But we really want to forget the indicator for a little bit, but you want to be, and the indicator kind of waits, because you get your fast EMAs coming back above your 21 or the green. So here's where you want to get in anyway. There's right up in this area here that, of course, this entering here is a take profit up here. And then just recognizing, hey, opening session high here, Globex high here, reversal candles here, pretty much done going long. Unless I come down and retest and bounce up off the VWAP, I'm not looking for longs anyway. Then what does happen? Well, everything comes back below VWAP. So here's where you start going short again. You go short, you can get out when this candle gets trapped. You can go short here again, get out when this candle gets trapped. And you just have no reason to sit there. Is it going to reverse yet? Maybe this is the reversal. And then you end up chopping off your fingers, and then you finally start bleeding to death. So again, it's just the most important thing that I can convey today is still going back to, do you have rules defined, and are you following them? And if it's a NASDAQ or MES for Jake, 15 minutes is the most important piece of information that I can get to start the day. And then until I can get some clear rejection, and again, we can go through and look at it, but look where this VWAP is right here. We come down below this 15, the candle finally closes outside of that. We're below VWAP, below both fast moving EMAs. I have no reason to not get in there. I don't have a reason to get out until here. And we never do. This is where just, hey, especially Anthony, you'd mentioned earlier, it's like, hey, when we start making these all-time new highs, you don't know how far it's going to go. And that's where I really enjoy, from an MES perspective, 5 points, wait for another valid setup. 5 points, wait for another valid setup. So I wanted to go back to your other question, like with the indicator. I put it on there because it amazes me of how it validates my trading plan strategy that I'm using. Do I use a trade with? No, I forget to turn it on pretty much every day. But it's really cool because it validates my entry criteria. And again, it works during the New York session, not during Globex or anything, because things are too far sideways. But it is difficult to find. So here's Monday the 12th. So that was just yesterday. Let's just roll through. I love this one here because here's really we never do get a 5-minute candle to close below this range until clear down here, and there is no follow through. So that's another beautiful thing about the 15-minute range. Once she breaks out, breaks out so fast and furious. Hey, do you want to chase that? Okay, that's where you learn to recognize, hey, that's liquidation. Recognize it. Don't mess around with it. And as long as you're bouncing off of you kind of got your boxes in here, even though this is the upper limits of the 15-minute range, this type of reversal and liquidation I get into it every time. I won't wait until I get clear up here. But I'm not seeing this as much, in that first 30 minutes. I haven't seen a lot of this, even though historically it's very, very common. When we are on a very bullish multiple days in a row, this is probably one of the most common liquidation patterns that you'll see out there. And that's where we're just making newer highs every day. But again, above VWAP, 5 EMA, again, this is the signal candle. So even if we get in here and just take 5, we've got it. And then you wouldn't really be able to get in again, you know, unless you're shorting. But again, when I'm above VWAP and I'm back down in my box, I really want to see me bounce off of VWAP. So I wouldn't get back in until I'm right here. Then again, I'm above, white's above the green. I got the follow through here. Well, there's another, you know, easily 5 points. We can go all the way up to our exit criteria, which is below this candle here. And even here would be below this candle. But I do want to kind of show you get in, get out at 5 minute pops, because here's a 5 minute, here's a 5 point, here's a 5 point, here's a 5 point, and there's a 5 point. Never had to violate a single rule, never exposed myself to more than 5 points. I only went long when my fast moving EMAs were in agreement, and I got 5 points. Because when I start looking at my calculator, you know, when I got 5 points, even 5 micros on the MES at $5 a point, that's $25 for every point. You guys track that? 5 micros at $5. Okay, I'm times that times 5 points. That's 125. The goal is just 4 of those trades a day. Okay, so that's $500 on a 25K account. So actually, you got your 30% risk on the apex that you can't even take the full 4th trade on that. But this is your highest probable on the ES, 5 points. I've messed around with 10, I've messed around with 9, I've messed around with 3. 3, I find out that you can lose 5, and then you got to win 2 threes just to make that up. Where 5 is so common. So I'd be very curious, Anthony, on the NASDAQ, you know, what is equivalent of that? You know, 125 points on the NASDAQ would be, what, 6 points is 120. No. $2 a point. So if we went with 5 micros on the NASDAQ, that'd be $10 a point. So you just need to go basically 12.5 points.
Mm-hmm.
You know, 12.5 points though is probably about as common as getting about 3 points in the ES. So just kind of depending on your size, but if you used to go 5 micros and you go, you know, just say, hey, I want 12.5 points every pop, you know. And again, this is probably the easiest scalping setup that I've come up with that can give me the least amount of risk. Because if I come back 5, done. Because how many times, even if I got back in here and I was trying to make 5, well, I lost 5 here. Okay, so that was a loser. Where if I was bouncing off of VWAP, and I'm in the 15-minute range, so you got to be careful on that. But bouncing off of VWAP there's 5 points. You know, a nice bounce off of VWAP there, you know, is 5 points. And so it's like, hey, I'm going to do it again. Well, now I just lost 5 points. But right away, when this candle comes back in, I don't hesitate, and I got that 5 points back. But if I stay in this, well, now what if it follows through on that? Now I've lost 15 points. So that I'm preaching to the choir there. But what I'd really like to make sure everybody's seeing is you got your 5 here, you got your 5 here, you got your 5 there, you got your 5 there. So even if you can't, and again, you don't want to trade that opening session and say, Lon, I think your schedule, getting the kids off to school and everything, here's 6:50 in the morning. So if we don't even start till there, hey, we're bouncing off of VWAP. I really like that. My fast moving EMA is there. So I got my 5 points there. And I got my 5 points there. Done for the day. But do we wait for all the conditions to be met for that to happen? And do we get out at 5 points or do we stay in? Okay, 15-minute range here. This would be a good one because you don't have that movement or anything. But what you do have is the bounce off of VWAP. And those are, again, the 15 minutes is, I'm looking for that up and away, but there are a lot of scalping opportunities when we get in there. But if we fail here, and we follow through, you get a nice bounce off of VWAP. I mean, if you just bounce off of VWAP, again, this is a different strategy, but you got your 5 points there. You get back in off of VWAP, and here you're actually going to lose. You're going to get taken out there, but then you get your 5 points back there. You get your 5 points back there. So you kind of see that if you can recognize the range, it's a different strategy. I don't want to confuse people because, like the indicator, when price is making higher lows and higher highs, you look at those pullbacks and you get in. But when we're looking at, I think this might be, I can't remember if this was Newsday or whatever coming up, might have been at around 10, but man, above VWAP is so valuable. And then to recognize this candle, and we don't break below VWAP, we don't stay below it. You should not have had more than one loss here, but you got 2 of them back right through here. So again, minimizing that risk, learn to pull the plug consistently. Know to take profits off the table consistently. You win more than you lose. Takes the stress out of trading. Because you don't want to be up 10, 15 points and then take a 5-point loss. Because then you got a 20-point drawdown. Okay, opening range, when it's clean, this is not clean. This is only scalping if you dare trade. It's only scalping. And if I was to scalp here, I'm only going to go long, and I'm taking these bounces off of VWAP and my slower moving EMA and 5 points at a pop. But that's very focused. You've got to have your stops in there, and you got to deal with the rule. Hey, am I going to get out of the trade if I lose 5? Because you can win a lot of 5-point targets in this type of market. This is actually some of the best days, but it's not a trend trade. It's a whole different type of setup. You can recognize this a lot of times. Here's our first 5-minute candle closing above our 15-minute range. We don't get the follow through. So we know right away that we're not in a overall like a bullish day. I want to make sure you guys catch that. Because what do? You don't want to blindly go in 15-minute opening range, 2 minute, 3 minute. Okay, again, here's your 1 hour, 50-minute. So we know that that's going to provide some type of resistance. But this 5-minute candle closing above the 15-minute, did it have any decent follow through at all? It didn't. So that right there lets you know, hey, we've got nothing but resistance up in here. But I'm above VWAP. I'm staying above my 100. I'm staying above the center part of this. And really that's what kind of carries over into this area.
Not to mention, if you look at so after that 5 minutes, notice that the next 5, look at the wicks. So it's telling you there's resistance.
Yeah, there's no follow through.
Yeah, so you really shouldn't be in after that initial 5 minutes, because so for me, what I would look at is, okay, so the second candle after the 5 shows, okay, I may have reached the summit, and now it's the time to consider getting out.
Yeah.
Because a reversal is more likely to happen, because as you notice, the 3 candles after that never could get beyond, because you see that the wicks. So there's definitely strong resistance, and the bulls are coming in, or the bears are coming in and trying to say, not so fast. We're not ready for that yet. So
come all the way back down to here.
yeah, so that would be kind of, again, if you got in at the very beginning, hey, that 5-minute candle, I'm thinking that's pretty good profit right there. I think you kind of say, okay, let's take a break, take a breather. This is where we often find ourselves over trading, right? As I've said, don't trade your profits away. Just be satisfied with that.
Be very, very satisfied. If you got in here, you know, this wick, everything you said right there is on point, because the worst case scenario is, hey, I'm going to get out here, but I still got over 6 points. Even if you just lock in and say, hey, I'm locking in 5 points. Okay, you would have got stopped out on this candle anyway. But if, let's say, if you didn't there, hey, you would have got a couple extra points. But regardless, you got stopped out at 5 points. You lock it in right away. You get taken out there. You don't see the follow through up here. So you wait to see what happens. And then when you start seeing this right here, you know, there's a lot of reasons. Scalp, I'm not, you know, even if I get in below that candle, there's all but still got 5 points. And then I don't worry about if it's going to keep going up here, not after watching this. But hey, kind of back to where the 5 point comes in so many times, I'm like, good grief. Now I've also got a cushion. You know, so get 5 off the early one there, another 5. You've seen this all the way come back down into here with a big bullish here. It just comes right back down and does it again. And then you got these wicks. And then when you get this hammer right here, hey, there's a lot of reasons to consider getting back in for another scalp. Again, I'm above my 5, above my 20. And when I get follow through of this hammer candle, well, I got another 5+ points there. We're not getting good follow through here. Again, another great large wicks. It comes back down, back up right into our resistance. So we're not even going to think about getting back in here. But then when we see kind of this area right here, then we can start thinking about it again. The only reason I am aggressive on these because I'm holding above this VWAP. So then I would be looking at, when I get the clean follow through here, I'd be looking at jumping in somewhere in here. And again, can I get another 5 points? Then I'm done for the day. I don't even mess with it, especially if I'm 4 for 4. But it's 4 by 4. If you're looking at a trend, you know, you're able to get in here for 5. You're above everything. You're able to get back in here for 5. I mean, there's so many ways to get 5 points. And if we look at where's the overall support, and is it less than 5 points before we actually create a lower low, then you've got a high probable setup. And what do I mean by that? So if here's what I need to stay above, you know, 5 points is down into here. So above here, I'm pretty comfortable right up in this area right here. it's just the idea. I don't know how long. Here's where I could get conditions met again, because now my fast moving EMA, everything's crossing right in here. This candle comes up, brings up the fast moving A, it comes back down a high or low. Here's where I start getting everything in agreement. So no reason to not go long here again. Down here, a little bit nervous until here. So I'd be looking at above this candle, I'd be good to go. Once I trapped this one here, I'd have no problem getting in here. And do I get 5 points? Look at that, over 5 points again. And then I'm just waiting and kind of watching this area right here. I'm staying above. If I can get the follow through of like these wicks in here, there's another 5 points right there again. And again, am I still trading in that part of the session? No, but it is, your target needs to be, my recommendation needs to be as large as your risk, if not greater. But when you are able to enter in at support or near support, you have the momentum for those scalps. And I don't have to win 2 to make up for the loss of 1 once I find that sweet spot. You know, and to me, it's 5 points for a scalp. Now, opening range, I'm looking a lot more when I got a clear break down and away or up and away, that I'm looking to stay in until I get that extra criteria. So I'm talking 2 different things here. But if you're not trading the 15-minute opening range, and today, a day like this is nothing but 5 points at a time. 5 points at a time. You come over here, this is where we got to be patient. This right here protects us. We do get some follow through here finally, above our 15-minute opening range. So the fact that we're able to kind of get in above this area here, hey, you got your 5 points. And if you wanted to stay in because you really didn't have a bear candle close below here, you could, but your exit criteria definitely should be in this area. So worst case scenarios, you're going to break even. But hey, what if we got 5 points right off the bat? The longer it takes us to get entry criteria met above or below is the more higher probable that it's going to range more outside that box. What do I mean by that? Because that is one of the nuances that you've got to learn to recognize pretty quick. Okay, upper portion of the 15-minute. Okay, we get a 5-minute candle. It does actually, let's see here, 5, 10, 15. So we do get a 5-minute candle closing below. So there's a lot of reasons to get in right there. We're 50 minutes clear down here. And this is where having defined rules of where I want to get in. So worst case scenario is, hey, I didn't quite make it up to here, but I got the follow through that I wanted from here. Okay, well, I barely got 5 points out of it. Okay, if I recognize that if I didn't get out, because I'm expecting kind of a down and away, then when this candle here gets trapped, gets taken out, well, then I broke even. So it's a wash here, but now we're above VWAP. So I'm only going to be looking for long, but I need to get out of this box here. Need to get out of this box. But we start looking at 5 point opportunities coming in here. Well, there's 5. Never did come close, never was in drawdown. Then we get this bounce off of our support again, bottom part of the box. You got another 5 right there. Now we're up out of our box. Are we a little bit more comfortable? But because it was at the top of the box, the bottom of the box, the top of the box, the bottom of the box, this is where I'm not going to be staying in a trade very long. It's too rangy. So I'm only going to apply a scalping approach up and away from this box. Similar to what I would have done, I did here, down and away, scalped and away. I might have tried to stay in, and we did know news was coming in, so I knew I was going to be out by 6. This is a news candle. I knew I was going to be out by 6. Didn't get the follow through from this candle that I wanted right away. So that saves my bacon. It's like, okay, get out, wait for the news. I didn't lose anything, haven't won anything. And then the news is done. And then we get this indecision here, follow through. I'm above VWAP. I'm like, hey, can I make it back to the upper part of my box? So then, yes, I would get in, but I'll keep it short. I took my 5, it come back. I love the bounce off of VWAP again. So I get back in here, I get 5 points. Now I've got follow through above a 5-minute candle closing on the upper part. So now it's like, get in again. Can I get 5 points? And that's where you got to make a decision. Am I going to stay in? I get a double top right here. This red candle, most likely it's going to get out. So it's going to be anywhere from 3 to 5 points right there. But that is not a surprise. Upper part of the box, bottom of the box, upper part of the box, bottom part of the box. Break out of the box, comes back down into the box. It's a range day. So then you just got to decide, okay, what are the conditions and what are the directions that I'm going to scalp? Okay, I'm not a real big short person, so I want to wait and see what's going to happen here off of VWAP. And then I would get in here again. Now, I don't know what happened there. Okay, I want to shut up for a minute, and I want to just kind of hear you guys' thoughts, because I know I don't believe I'm doing anything different than what I've shared really for the last, I don't know how many sessions, but I'd love to know you guys' thoughts. Does this help? Where are you? What's working for you that you'd like to share with the group? Because I'm really trying not to throw any. So we covered how important that 15 minutes is. We've talked about different ways you can kind of scalp and what are the conditions you're looking for. Because before my screen bleeped on me, I kind of wanted to highlight, I'm bullish, I'm above VWAP, taking profits here. I wait to see if it's going to come back down to VWAP. So I'm not even in a trade until I get this signal candle here, and then I'm in for another 5 points. Again, I've kind of assessed range day. So again, 5 points. I'm very happy with that right there. You know, that's two winners. We'll just say out of 1, 2, 3. I'll just say these two. We'll say that this was a break even. But now I was successful with scalping, but we get this shooting star here. We can't make a higher high, and then we get this big bull candle here, and now we're below all our moving averages and the VWAP. As long as these conditions remain intact, I'm only going to short again. There is no reason to even consider reversal criteria. Every single 5-minute candle is staying below the fastest of the fast-moving EMAs. So here's really the trade of the day. It takes clear up until, the last hour, essentially, before we actually have a clean break out of our 15-minute opening range. But the big takeaway here is, how did we avoid being bullish for the first part of the session? Do we have rules? Do we have criteria that says, hey, I am no longer going to hold on to a long trade. I'm no longer going to expect it to reverse back up. Get out of the trade. Get out of the trade. Top of the box, bottom, top, bottom. Very rangy. A lot of volatility. It's moving around. That's where your scalping strategy really can protect you. And then the reason to get in. We don't want to get in here, get 5, and then turn around, put in another entry point, think we're going to get another 5. Once you exit because you got 5 points, the most important thing, and this was my challenge. It cost me a lot. I continue just, well, if I got 5 now, why can't I get 5 more? Oh, I just got 5. Can I get 5 more? But when I actually just said, hey, if I only get 5 today, I had a winning day. If I only get 5 today. And then when I started realizing that, it's like, oh, wait a minute here. For 5, 10, 15, 20, 25, 30, 35 minutes, I had 0 risk, 0 exposure. It was very comfortable. I'm like, oh, criteria is finally met. Oh, I just got another 5. And then it comes back down here. I'm like, oh, I'm above my 15-minute box. I got follow through happening from this candle. My risk is down to here. I get back in. Oh, I just got another 5 on a range day. Here is where we say, hey, I'm no longer looking to go long. I'm struggling around this VWAP, but my white stays below my green. So no reason to even think about going long. And that works the same on the NASDAQ as it does on the ES. I haven't looked at gold. I haven't looked at anything else. But I want to submit to everyone in this group here and then listening to it later that if your exit criteria is defined and you never compromise that, you will increase the balance in your accounts over time substantially. You know, what is that sweet spot? On the ES, MES, not getting in for 5-point targets on follow-throughs of winning trades, but let each one stand on its own merit. Again, this one, we could have got in here with a 5-point risk. See, our 5-point risk would have been clear down right at the bottom of the box. We could have got in here and stayed in up to here. And I say here because let's say this would have been our exit criteria. Here's really our first bear bull candle getting trapped. Really would have been right about there. Okay. That works just as well. It's just that you had to write all this back in there. And when you've got this type of range, and how do you know we're not going to retest this low here again? And if you're happy with 5 points, if that's the only trade you get in that day, which the challenge that I have is show me a day where there's not multiple 5-point wins with no greater than 5-point losses. They're just very rare. And this is really beautiful day here. Here's one of those big candle up and away from our 5-minute, 15-minute opening range, 5, 10, 15. We take this out here. Here's our first candle closing above. You don't get that retracement. Can feel like you're chasing, or is it rules based? Here's the follow through of this first 5-minute candle. If it reverses right away, you're out. But in the meantime, everything's up and away from VWAP and this 100 EMA. According to the rules, I can get in right there. Do I just get in it for 5? Or do I get in until first opposite colored candle gets trapped, which really would have been right in here. Once this candle gets trapped, that's the first one to get trapped. So there's 10 points running with momentum. So I've got a big, strong momentum coming out. My only risk was if I start retracing, if I do decide to get in there, which it's sometimes that's very difficult to get in. But my rule is there's my 5 points. But if I start seeing more red, more red, more red from this wick, I'm out. If it comes back down and bounces off of my upper range and then traps the candle again, then you've got an opportunity to get back in. But here's where, again, it's a rules-based momentum. I really do need to see what this 5-minute candle here is going to happen. Do we have follow through above this first 5-minute candle? Okay, you let it come out. Look at all this noise here. Here's our VWAP. We know that we don't need to be shorting this day. If you shorted here back down to VWAP, great. There's a lot of people that would do that. Regardless, Anthony Wicks down through here, we're looking, hey, if I'm coming up off a VWAP, now I've got my fastest moving EMA moving back above my 21, I'm looking at getting back in here. 5 points at a time. If I get out 5 there, it's like, okay, I've got to wait. I've got to wait until I get another valid entry. Well, what's another valid entry? There's really not one until you get here. But now you've got this to kind of watch. And that's where you either scout, 5 points there, or you wait until you get a opposite colored candle trapped. This really, a shooting star would be a reason to get out. But if you get up beyond, this was a lot of momentum. So you can kind of expect momentum here again. We don't have 5-minute candles going 50 points, back down 50 points, up 50 points. We've got a nice, clear trend on each direction. So again, that's a nuance, but we didn't spend much time in our 15-minute opening range. So we have one of those days where it's like, hey, it's not extremely choppy. We're going to get some momentum moves. So there's a beautiful momentum trend. Once you get this wick coming in here, there's no sense of staying in the trade. Let's see what happens down around VWAP. Does our fastest moving EMA hold above our green? It does not. But we got beautiful support back down in here again. So once this noise is gone here, it's just back to, it's noisy in this box. Once I get up out of this box, and as long as I can move up and away from that consolidation, it's deciding what it's doing here. But now it's up and away. Here's my entry criteria: fast moving EMA back above the slower moving EMA. But we got 5 over here, we got 5 over there. We're not going to follow through. I'm usually really gun shy. So if I get 5 into this area, this is kind of what I was talking about earlier, is where I get in a hurry is like, I got 5 here, so let me just get back in. And then that's where we roll back over. You start giving it away, but just hold off again until you have some of that official entry criteria. Nice hammer right there. We're staying above. Here's another little pullback. This is where I would not hesitate to get back in. When this cannot get taken out, we're staying above. And now here's, if this is where the indicator kind of comes in pretty nice, because it should give us a good buy signal right there. That pops in here. It's thinking. But it's this nice little pullback here higher, but this is kind of what I'm wanting to kind of show you guys. We trap there, we get to follow through there. There's another 5 points we got there. And then at the very beginning of this call, one of the things I want to highlight it is things start going sideways. One of the greatest things we can learn to do is we wait for the slower moving EMA to get caught up. In other words, as long as these candles continue staying like above your slower moving EMA, you don't have a reversal. And you really have we don't want to be going short. That's kind of what I'm getting at. But how many times when we get days like these, fast moving EMA stays above the slow one, for the most part, you are good to continue to scalp until they come back together. Then you don't know what it's going to do, and it happens to be the end of the session. If white line comes back below the green and gets rejected, that's where we get this type of momentum. It would come back in. We just got to learn to recognize that. Let me jump to today. Oh, there's the indicator. Where that kind of comes in, white is staying below the green. So this is where is a reversal here? Is this a reversal? Is this the reversal? Is this the reversal? We really don't get it. If it's just a rules based, you're not going to get in until you're back above the slower moving EMA. But this white and this green, they got to come back together for a reversal. Here they come back together. It was a reversal. Here they come back together, and it's a crossover that holds. But why that's important is if we think this is a reversal, big bullish move, this was solid green at one time, and if we're getting in above here, our VWAP's clear up here, but this green fast moving EMA is clear up here. Well, we would have had to ride it clear back down to here. And then we would have barely just made it up to VWAP. So that's kind of what I'm getting at. Reversal, double bottoms, double tops are going to slow things down and bring your moving averages closer together. Then you're going to be able to respond to a reversal versus reacting and assume a reversal is happening. But today was one of those days where if you follow your rules and only trade the momentum, white above green here, hey, I'm bullish, I'm long, I'm above VWAP, I'm going to go, but there's my reasons to get out right here. It's just real clear. We could not come up and retest this high. Now I'm back below VWAP. Anywhere in here, I've got strong confirmation that, hey, we're probably going to come and make a lower low potentially, if not retest these lows. So I can get in anywhere below VWAP, below this fast moving EMA. Any of these rejection criterias, follow through really of this opposite colored candle is a beautiful place to get in. So here you come in, even if you get below that one there, well, there's 5 points. Nice rejection again up here. Get in below this one here. There's another 5 points. Rejection up here again. If I don't even get in till here, there's another 5 points. So do you have the rules? Are you looking at the lower highs to go short? Are you looking at higher lows to go long? Does that make sense? If you're above VWAP, most likely I personally will only go long and I'll look for those pullbacks. Once VWAP no longer holds, then I'm going to look for rejections again in my faster moving EMAs. And if I'm not real comfortable with the overall direction, knowing that this could come in at any time, one of the things I wanted to share is, hey, look at individual trades, 5 points, let the entry criteria stand on its own merit, and that protects your intraday drawdown. Staying in the trade, waiting for that trap. Well, if it's a 50-point candle required to trap, well, that's a lot of drawdown in an Apex account. But if you just look at, hey, I want 3 or 4 trades a day, I know what my rules are, I can accept 5-point loss any given trade, but my goal is I've got high probable setups to get at least 5 points on. My goal is four trades a day. And then with a copy trader, I will go multiplier of 2 and 4, depending on the larger accounts, the size of the accounts. But that's a way to maximize that drawdown also. But it goes back to the EMAs. All they do is tell us what price is already done, and we're going to assume that that momentum is going to continue. A no indicator tells us what price is going to do, but it tells us what it has been doing. And so then we just go ahead and enter trades with defined rules based on what it's been doing until it changes. When we start assuming or think it's going to change, me personally, that's where I get in trouble. Wait until lagging indicators falls in line. It says, oh, okay, I got a trapped bear candle here. So I'm not going short here. I'm not going short. It's like, oh, maybe I want to go long because now I'm back above. This is a strong signal candle right there. Time of session, I'm also expecting that also. So again, that's another nuance I don't really want to get into right now, but this is what, 250, 350 Eastern Standard Time. So that was expected. If we take out this indecision candle, coming back up was expected, but that's really a strategy that stands on its own merit. Anything new today, or you just like, oh my gosh, this is the exact same thing he talks about every time we come together?
So for me, I'm seeing that looking at the ES, that there are a lot of opportunities for getting 5 points at a time. Because, so one thing is protecting your drawdown. So whenever I'm in profit, I move my stop loss into profit so that I know it's not a losing trade, especially if sometimes you get these candles that come out of nowhere. When you're looking at like reversals, the candle body's pretty large. So when you're talking about drawdown, it can be significant if you don't have a lot available of drawdown. One thing is looking too is one thing to talk about is the candle body. The longer the candle body, the stronger that movement is. So when I'm looking at some of these candle bodies that are kind of clustered together and the body's not very large, that to me then talks about strength of momentum. And so I'm going to be cautious versus some other ones where you see nice size bodies and so it's trending. So I'm a little more confident as far as that goes. The other thing is if you're trading, okay, so Take Profit Trader recently just enacted a new rule that you cannot trade during news. So that's something to think about, is paying attention to when news events happen. Now, Apex doesn't have a rule against trading on news, so not, a concern, but I would suggest don't trade during news. Because if you're anticipating, it's really a gamble, in my opinion. So at 8:30 this morning, CPI came out. And so look at that.
Yeah,
But look up until then, before 8:30, candle bodies weren't very big. It was just kind of plugging along. And now it could have very easily gone the other direction. And that's what I'm saying is I don't trade during news because unless I know what the numbers are going to be, it was CPI, then I can't predict the sentiment. And you can quickly lose the account
yeah,
on
that's
something like that.
$1,825 candle. What, just one one ES. So
Yeah.
imagine the NASDAQ,
Yeah.
probably 3,000. Well, it'd have been about the same,
Yeah.
No, probably if you go a whole mini on a NASDAQ, it'd probably been a little bit more. But yeah,
And
to your point.
yeah. The other thing is we got to practice taking our time. You don't have to get an account funded in one day or one trade. Take your time. I have found, so, it goes back into, are we over leveraging the account? And then that's when these momentum shifts can, cause you to lose the account versus being cautious. So I have a PA account that I'm strictly just trading micros. That's all. I'm not doing minis at all. Even if I see momentum, where I feel pretty good, and then, you get convinced, oh, well, let me go larger. And then that's when you find out that you're so in tuned with that you don't pay attention to momentum starting to change. So, that's another thing I'm trying to do is slow down to speed up.
That's very good. That's very good. It kind of goes back to, you're on a roll. You've got 3 or 4 you've won in a row. Well, then I think, okay, I think I've got momentum. We've got direction. So then I'll just get back in and realize that, hey, I just kind of hit resistance. And then she does come back about 3 opposite colored candles, and it could be a reversal or it may not, but then that drawdown is affected. And from a scalping perspective, when you're taking 5-point wins, well, when you take more than a 5-point loss, now it can mess you up psychologically. Where if you get out at your stop loss and then it continues in that direction, then it's to me the same emotion as being in a winning trade is there, because it's like, oh, this is when it comes back down and hits support, I'm actually going to be in a winning trade again versus having to hope that I can break even. Very, very, very important. What are your lagging indicators? What information are they telling you? That is the direction that price has been going. So then we have defined entry criteria to go ahead and join the market in what it has been doing until the market says, I'm going to do something else. And when we're in a trade, when it decides to do something else, our small loss on that, if there is a loss, should never cause any emotional angst. That to me is what I'm focusing on for me. And it's all psychological now. It's like, hey, I do my homework every day. I look at how good I should have done. A lot more days I'm doing what the homework shows, but there's some days where when I start winning multiple days in a row, then I get a little overconfident. I stay in the trade, and that happens to be when we get the major liquidation and it doesn't stop. I'm like, you got to be kidding me. And that's all it takes. That's all it takes.
If I'm not mistaken, aren't all indicators lagging?
Yeah, they are.
All of them are. So
Yeah, there's not an indicator out there that, I mean, there are some people that claim that they're not, but there's no indicator out there. And that's why patterns, momentum is our best leading indicator. You can almost call it leading because here's kind of like your, whatever indicator, what's the word I'm looking for? These oscillators, these indicators down here. I mean, these are momentum indicators that allow us to see when they're pointing. Well, prices, there's momentum. When they start flattening out, the buying pressure has slowed down. It could reverse, and then it slows down a little bit, kind of comes back up, but the buying pressure, it flattens out again. It's slowing down.
Right there where you're indicating right now, if you look, it does not correlate to the chart. The chart is going down. Your oscillator is actually going up. Do you see that?
Yeah, right.
Yeah, right there. It's going up, but if you look at the chart, it's actually going down. So something to take into consideration, because I've looked at that. Well, look even at the next level past that where it's going up, the indicator. Yep, right there, it's going up, yet the chart is going down. So that's, it's good, but I wouldn't count on that at all times, So I'm trying to think, because there's a term for that when it's, when you're looking at it looks like it's bearish on the indicator, but it's bearish on the chart. There's a name for that. It's something you look for.
Kind of like the divergence.
Yeah.
Counterintuitive.
Yeah.
Yeah, divergence is very powerful, to recognize like this. We kind of we do have a higher high here, but I mean, there's a big price movement through here. I mean, these to me kind of look like they agree. When things flatten out here is where things are reversing here. Flattens out here, then that momentum. So if you're long here, again, stay long until it's no longer long. But because of VWAP and our slower moving averages, we know, and we're below this 15-minute opening range. Hey, we know that the highest probable wins overall for the day are going to be short. And whenever we're below VWAP, below all our moving averages, as long as we stay short, we're actually okay. And I think that's really what I was trying to get at is big picture here, short here, we don't even think about going long below VWAP, below 15-minute opening range, below two fast-moving EMAs. What's price doing? Don't assume and don't even anticipate it to reverse until you get that exit criteria. Here is immediate check that, hey, the bears have kind of slowed down a little bit. So what is price doing? Hey, it's just continuing to go down. I don't have any information. Even this wick, when it comes up, it rejects at the 15-minute opening range. And then we get beautiful follow through on each candle. And from a rules-based, I don't have to get out until this green candle gets taken out. So this is all lagging indicators, but I don't have to worry about nothing. Newton's law of motion. I mean, something is going to stay in motion until something else comes in. What is that something else? That is a hammer off of a large extension away. So lagging indicators are just telling us what's been happening, what happened the last 5 minutes is likely going to happen the next 5 minutes. What happened this 5 minutes is likely what's going to happen the next 5 minutes. What happened this 5 minutes, hey, it's likely what's going to happen another 5 minutes. Oh, but it didn't. Can we recognize that when it didn't? And that is exit criteria. That is take profit criteria.
Hey Jake, on your EMAs, your fast EMAs, can you remind me what are they anchored to the current time frame or are they anchored to specific time frames?
Whatever time frame that is on.
Okay.
That's this ribbon here. Meaning, so it's a 5 minute, and it is the average of the high and the low.
Okay.
And then an EMA 21, and then 100. The only one that is anchored is this orange. That is my 50 EMA, and it is anchored to the 1 hour. So 60-minute time frame, regardless of what time frame I select here, this is tied to the 1 hour.
Okay. All right. Thank you.
Yeah, and really that's just important for me at the beginning of a session. Because here we're way above it. We come down to it. Well, now we're kind of back above it. So I mean, it does carry a lot of weight. It's just we do break down through it here. Yeah, not every day is it in there. Let's just put it that way. Sometimes it's way out there.
No, but I still use that one, and it's interesting how the candles can come down and like touch it and then reverse sometimes. Not every day, but when it does happen, it's pretty obvious.
So many times, you're exactly right. That's why it's on there. You know, and it's. Do we need anything more than maybe a single indicator? Not really. But when you're multitasking and gotten maybe trading on a few different platforms, I like to be able to hastily look and objectively know that, hey, because even here, I would think, well, this is probably going to be another lower high. But when I see that my lagging indicators are like this crossover with a lagging indicator, or this is pointing up, that is a flag. Even though this is lagging, but it's a significant change in momentum. Larger picture, our momentum is down because again, our slower moving, but lagging indicators are telling us that, hey, this overall direction is bearish. So that's what saves me is once I'm down below here, I'm only going to look for short. Exit criteria. Rejection. I'm only looking for short. Exit criteria. Rejection. I'm only looking for short. Exit criteria. And now I'm looking for another short, but it doesn't happen. One, price never presents. I don't get any wicks rejecting up here again. Not clear till clear up here. And at the same time, I've got lagging indicators flipping. So I have to interpret that as like, oh, there has been from 8:35 or 12:35 p.m. Eastern Standard Time clear until 3:45 p.m. Eastern Standard Time, I have zero criteria to ever go long. I'm only going to follow the actual momentum of these lagging indicators. And then the candles themselves, my exit criteria is, hey, when this candle gets trapped, I'm no longer going to go short. And then what's the reason to go short again? Well, it's never met, so I never lose a short trade on this reversal. You know, if I went in long, which I did today, then we're good. I just happen to know what time it was. I was expecting a strong move, but that's a different trade that stands on its own. because I was very aggressive when I got in down here. But the biggest takeaway, my biggest takeaways for myself personally, which kind of ties everything together tonight, is don't assume a reversal at any time. Continue to trade the overall momentum. We got a very strong hint at what the overall day was going to look like right here. So even though there's opportunities to go long, that's where you're going to probably want to focus on scalping, and then don't get caught in, hey, this is just consolidation and the bulls are going to resume. Not with this type of bearish pressure. Why not wait and see? And then when you're below all your lagging indicators, even if it's trapping this bull before you actually get in, well, then you just stay in until this candle gets taken out. And you're like, okay, let's see if this is a reversal. If I come back above my slower moving EMA here and my white would be above the green, then it'd be like reversal. I would go long again. I'd say, okay, maybe I'm going to go up to VWAP now. It doesn't happen. So I'm like, okay, the bigger picture is telling me this has been a bearish day. It is the safest and most probable for me to go ahead and continue short. Same thing here, and I can go short again. Here's the reason I would get out. I'm not going to stay short through this here when this happens. I'm not going to stay short through here when this happens. I'm not going to stay short through here when this happens. But while it's happening, I'm going to go ahead and stay in the trade. While it's happening, I'm going to stay in the trade. So here's my opening range, conditions met. Couldn't really get back in until I want to see my white cross over the green. Here it comes up and gets rejected, which again, that was just liquidation right there. But here's where I'm comfortable to get back in. Here's the reason I'm going to get out. I cannot get a higher high here for the longest time ever. But I'm like, am I going to bounce off a VWAP? This wick comes all the way back up. Oh, we might come back up here. There was no follow through. Didn't even retest that. Once we take out that wick, comes back up, we get rejected here. That's where I would be looking at getting in again. So my greatest victories past few months is what we just talked about in the last 10 minutes. And that's not to assume that the bulls are going to show up at the end of every 5-minute wick. You know, if it's a bearish day, I have to respect the bears. I have to be just as excited. I should be able to go, you know, this is a bearish day. Well, why don't I trade these bears? You know, I mean, that's just a simple Alt-I in trading view. Same chart. Don't have to change the rules. If I'm more comfortable going long, why can't I train myself to be just as comfortable going short? Same criteria. I mean, again, this is inverted, but you see that there's no difference. You can turn these, flip them upside down. It should be just as easy to go short as it is long. And that's it's psychological. I mean, these are red candles, but when we just turn the chart over, I just do a 180 up and away from my 15-minute opening range. I really have no reason to get out until right here. Same rules. But I'm above VWAP. I'm above this, so I'm only looking to go long. Lower high here, big move down, nice consolidation. I'm bouncing off of VWAP. So I'd be looking at going back in there, get rejected real fast, and then she follows through. So if I did get in here and I didn't take profits here, I'm getting stopped when VWAP won't hold. Now let me turn the chart back over and look at it through that same perspective. So if I go in short, I got rejected off of VWAP. If I was to get in here and go short, that would have been a beautiful scalp. If I would have sneezed, I would have missed it. But that would have been in line with the rules. And then as soon as this wick comes back in, it traps that. I mean, again, now we can say, hey, this momentum has changed. Can we recognize in time, before we put ourselves in a bind, that, hey, I'm no longer trading what the chart has been doing. The chart is giving me plenty of information to say that, hey, I don't know what I'm going to do here for the next 3 or 4 candles. Why don't you wait a few minutes? And then I'll show you, I'll give you a hint of what I want to do. So we wait a few minutes through here. Blip, it kind of comes back up. Hey, bulls really do want to get a whirl at it. But right here, there's 5 different reasons to exit. 1, can't make a higher high. 2, shooting star. 3, we've got a follow through below fast moving EMA with a big red candle. Another lower high. And now VWAP can't hold. I used to stay in those. And I used to ride this all the way down, and then I would bank on this, which, hey, 6, 7 out of 10 times you're going to get this, but not always. It rolls back over, and the market closes at the low of the day. Now I've lost a week's worth of profits. And so that's a therefore thou shalt not assume anything. And if I do assume here, then once this wick comes back up, I'm above here. That's my risk right in there. That's my risk. Time of session, I will stay in longer than 5 points, knowing that VWAP's clear up here. That is a strategy that stands on its own. That's a nuance based on the last hour. That's a nuance. However, it does not compromise any of the other rules. I'm looking, this wick comes up here. Strong momentum from my fast moving EMA. Once price is above this green, I'm in, knowing my risk is down to here. We're good. But don't ever assume it's going to reverse. Continue to trade based on what your lagging indicators are telling you that is happening now. When it changes, it'll let you know. You may have to wait a while, but let a new entry stand on its own merit. Hope that helps. Any other? And I think Salon is gone. You guys want me to paste the code from these in there? You can just kind of mess around with if you're into ChatGPT or whatever and throw it in there. I don't really know of an easy way to go in and break it down, but it's kind of cool to have it validate. All it is I built some according to my trading plan, and I'll be darned, it's kind of cool, but I don't use it because I want to see what the candles are doing, and I've got my lagging indicators. But I was just messing around with the code, and I'm like, hey, I've seen some of these people utilizing AI, and I'm like, let me try it, and I was like, I'll be darned, it was fun. It was a fun project. It took me an hour. And I just haven't maintained it or anything, but all it does is it's an indicator, just shows us what we already see from the candles and from a fast moving EMA.
I'll say go ahead and paste it. And that way, if you're pasting it and Svetlana has it, then we have it too. I did try something like that, and then I was putting it in Pine Editor. And really, I did the chat and just tell it some, rules that you want. And then it creates the code for you.
Yeah.
But somehow when I went into Pine Editor, I don't know, something happened. I got to play around with that to get the code back in there. But yeah, I mean, it just really is just telling it what you want and what you don't want. And what I thought was interesting, like Chat GBT will actually ask you questions if it wants to refine some of the rules that you've indicated.
Yeah.
So
Yeah, I use Grok. I haven't used Chat GBT.
yeah.
And so it'd be interesting, but I think most of them they provide a Pine script response. I mean, when you're actually
Yeah.
hey, TradingView uses this, this is Pine script, I got it. And then
Right.
just like you said, it was interesting. Okay, I wanted to do this. It says, okay, it was
And then it would have a follow-up question,
yeah.
And then I go, okay, yeah, that sounds good. And go ahead and do that. And then it would do it. And yeah.
Because what it really comes down to, this is, I think, and I want to go in and kind of tweak it with the 5 points, because I've been totally amazed. I don't know if it has to do with the time of year, but the last, December, January, I'm just like, the 5 points has just been so valuable. And I'm just like, it's just taken a lot of, it's like, should I stay in? Should I get out? I'm like, look at how many different opportunities I got to get in and how many times we do get 5 points. And it just kind of blew me away. And I'm like, well, I'm getting 4 in a row, multiple days in a row without even a loss. I'm like, maybe there is something to that, because you have to almost trade all day to get 20 points in one trade. Where you get in for 5, it might just be, 5 or 10 minutes. And then even if it continues up 15, 20 more points, well, then you're going to get this reversal. Well, there's your other 5 points right there. It's like, hey, I planned on going long, but if I was planning on 20 points here, well, next thing you know, you go up here and it reverses on you, you're breaking even. Where how many times you can get, anyway, you talk for hours. It's different, volume, volatility. If you're NASDAQ versus MES, it all is gonna your approach to trading. What are you comfortable with? What are you not? 5 points MES, I wanted to share that because it became such a high probable setup with the 5 EMA, always on the same side that I'm trading of my 21 EMA. That's really, in a nutshell. 5 points is such a high probable setup. I mean, even you look here, we take this candle out here, say I'm bullish as all get out. Here's indecision. I want to see this trapped. I know that I could run into an issue if I don't have follow through on this 21 EMA. But again, so just a little bit of shy of 5 following the rules there. But as soon as this wick kind of comes in, you start seeing the red, you get out. Hey, you got 3 points. You got 2 points because you expected a rejection right there for one. You expected it. And that's probably the biggest takeaway of, hey, continue to your overall trading plan, stick with the larger time frame momentum. This is a bearish day, much lower high here. The bears continued. The bears won out for the day. And here's just your last hour. But we learned so much from this little box here. And the fact that it just kind of comes back up in it, rejects, just confirms that, okay, most likely now, if we do come back below VWAP, we're going to stay short for a while. 1, 2, 3. That's almost like an Elliott wave, isn't it?
Mhm.
Again, that's a nuance. And an Elliott wave to me is alive and well. When I get 3 good pushes in one direction, I'm like, hey, that's good enough. Take some profits off the table. I'm like, is it going to continue in that direction? Well, I've only really got one good push. Most likely, it probably will go make a lower low or a higher high, and it does. Not always, but there's an edge just by understanding that. So, I know Michelle had mentioned we wanted a trade. So I promise what we're going to do in 2 weeks is summarize our rules. And then we're actually going to just trade. We'll do one candle at a time, executing the playbook. So everybody's going to be able to decide what they want to do. We'll either I'll download a bunch of data in Ninja to where we can utilize the whole candle. But the reality is a whole candle at a time should be enough in TradingView. I just use that. I'll go through just for quick exercises. Does that candle meet exit criteria? Does that candle meet exit criteria? Does that candle meet exit criteria? With ES, it's a little easier to back trade with TradingView because you don't have those 50, 100 point reversal candles. Where like in real life, hey, if you've got a 50 point candle in the NQ, well, by the time it gets back up 25 points, you're cut and slaying. You know, you're not going to allow it to retrace all the way back 50 points, especially if it's a pretty aggressive, retracement of that drop, because you're looking at, hey, that looks like liquidation. Let's take some profits. But that was on my notes because I've got playback trade as a group. Was one of the takeaways from last time. So Michelle, I know you're still logged in and you'll get the recording if you're not with us right now, but that for you, we are going to make sure we do that in 2 weeks. We're going to probably spend the whole session just discussing each candle and execute a trading plan.
Well, I'm here and I'll do my best to be there in attendance and help out.
All right, Professor. Excellent. So hope your holidays was wonderful, but any go backs? I'm going to go ahead and wrap everything up here. Oh,
For me, review is always a good thing, right? So you can't do that enough. You can't have the rules in front of you enough. It helps take the emotion out when you just pay attention to the rules, follow the rules, and no, so that's good. That's good stuff.
How many times? This is really me asking myself. Well, I've asked myself this many times. How many times do I have a bad day when I follow my rules? And it's very rare. I have a bad day or a lucky day, which may end good. And then I still even get a little frustrated with myself. It's like I shouldn't have had to go through that to get everything back. But how many times when you literally follow the rules explicitly do you actually have a bad day? And that's a challenge for everybody, and try to be able to recognize that. It's like you had a bad trading day, and then as you look back, it's like, well, I kind of violated my rule right here. That's 100% of the time for me. Do I win every trade? Nope. But if I follow my rules, 5-point loss is nothing. So. All right. I'm going to wrap it up right there. I'll get this dropped in. I appreciate you guys. We'll meet every the second and the fourth Tuesday.
Yep.
Is what we agreed
Yep.
upon. We made it through the holidays, so we should be pretty good shape. And we're going to do a lot more back trading going forward.
All right, sounds
Well,
good.
thank you, Jake.
Thanks,
All right.
Okay,
thanks
I
for meeting
appreciate
with
it.
us.
Thanks, Jack.
You
Bye.
bet. Bye.
All right. You have a good night.